Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings so you don't have to. Today we're diving into a report from Arista Networks, and it looks like there's more than just profits on the rise. We have a few people moving up the corporate ladder and out the door, and we will explain why you should care. Arista Networks just released their financial results, and there's a lot happening. From key personnel changes at the top to a juicy share repurchase plan, and of course the all-important financial figures. We're going to break it all down in simple terms. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below for more detailed questions and discussion. First up, let's talk about the money. Arista Networks announced their financial results for the first 3 months of 2025. They basically told everyone how much money they made and spent during that time. This helps investors and the public see how well the company is doing. Let's dive into some of the key numbers. Total revenue came in at just under $1.6 billion. That's a solid number. Looking at the revenue, it is a combination of product sales and services. Product revenue was over $1.3 billion, while service revenue contributed around $260 million. Now, let's look at what it cost them to make that money. The cost of product revenues, so the raw materials and manufacturing, was around $520 million. The cost of service revenue, like employee salaries and infrastructure, was almost $90 million. Operating expenses are important too. Selling, general and administrative expenses were just over $200 million. Research and development, which is crucial for a tech company like Arista, cost them almost $240 million. Moving down the income statement, they had a small amount of net other income, about $14 million, putting all of that together. Their income before taxes was roughly $570 million. Their net income, what they actually get to keep, was $480 million. Their net income, what they actually get to keep, was $480 million for the quarter. Alright, let's shift gears and talk about some of the people changes at Arista. Mark Taxay, who is the company's general counsel, which is basically their top lawyer, is leaving. He told the company he's resigning. His last day will be May 7, 2025. The company said it wasn't because he disagreed with them. So it sounds like he's just moving on to something new. But don't worry, they have a replacement ready to go. Sean Christopherson, who is the Deputy General Counsel, is getting promoted to the top lawyer spot. He's going to report to Chantel Breithaupt, who is the Chief Financial Officer. That change is happening very fast on May 8, 2025. Now let's talk about something that might make investors happy. Arista's board of directors, the people in charge, have approved a plan to buy back $1.5 billion worth of their own stock. This is called a share repurchase program. What this means is that the company can buy shares of its own stock. Companies often do this because they think their stock is undervalued and it can help boost the stock price. Arista will use its working capital, basically the money it has on hand, to fund these buybacks. They can buy the shares on the open market, which is like buying them on the stock exchange or through private deals. They could even use investment banks to help them out. However, and this is important, the program doesn't force Arista to buy any shares. It's just giving them the option to do so if they think it's a good move. So what does all of this mean? Let's break it down. First, Arista's financial results look pretty solid. Revenue is strong and they are making a healthy profit. The company is growing, although it could be faster compared to the previous years. The change in general counsel is interesting. Sometimes when a top executive leaves, it can signal trouble. In this case, the company is saying it was an amicable departure and they have a replacement ready to go, but it's always something to keep an eye on. Finally, the share repurchase program is generally a good sign for investors. It means the company has a lot of cash and thinks its stock is a good investment. It can also help boost the stock price, which is always welcome news for shareholders. The most notable weakness might be the increasing operating expenses. While revenue is growing, the cost of running the business is growing. This could squeeze profits in the future. It is something to watch in their next report. Overall, Arista Networks seems to be at a pretty good spot. They are a leader in their industry and they're making smart moves to keep growing. But as always, there are risks and uncertainties. The company needs to keep innovating and managing its expenses to stay ahead of the competition. Alright, that's our breakdown of Arista Networks' latest report. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.